Bitcoin in September seasonal slog. What opportunities should traders watch for? Bitcoin bull run. Despite September presenting a challenge, there might be opportunities to capitalize on Bitcoin's price action. Last updated September 10th, 2024 at 1741 GMT3. Junior content creator Harvey Hunter. Junior content creator Harvey Hunter. About author Harvey Hunter is a junior content creator at cryptonews.com. With a background in computer science, IT, and mathematics, he seamlessly transitioned from tech geek to crypto. Journalist. Author profile share. Copied last updated September 10th, 2024 at 1741 GMT3. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews as Bitcoin investors brace themselves for a seasonal slog in September. New York digital investment group NYDIG head of research Greg Cipollaro points to potential opportunities. In a September 10th NYDIG market update, Cipollaro described the potential near-term catalyst for Bitcoin as sparse, as the leading cryptocurrency enters one of its toughest months. Historically, September has been challenging for Bitcoin holders, with a mean loss of 5.9% over the 13 years since 2011. Something Cipollaro credited as a likely recurrence, noting that Bitcoin may be stuck in a seasonal slog. However, despite the prevailing negative sentiment, he expressed optimism, suggesting that September still holds some opportunities. Diamonds in the rough. What Bitcoin opportunities does September hold? Cipollaro added that Bitcoin investors may only be able to look for a few catalysts external to crypto in the coming weeks, with a tight focus on particular macroeconomic developments. Most catalysts have to do with macroeconomic data, inflation, unemployment, gross domestic product growth, or monetary decisions, Federal Open Market Committee interest rate decisions, and very few are crypto or Bitcoin specific. Most prominently, the approaching September 18th Federal Open Market Committee FOMC meeting to decide interest rates holds the most weight. Following Fed Chair Jerome Powell's comment that the time has come for the U.S. Federal Reserve to cut interest rates, anticipation is high. A 25 basis point cut is seen as the more favorable outcome, fostering long-term price appreciation for Bitcoin as the jitters about a slowing U.S. economy and the prospects of a recession ease. Conversely, a more aggressive rate cut could have an adverse effect, heightening recession fears and potentially leading to a significant Bitcoin retracement, with some anticipating a 20% drop. Currently, traders assign a 27% probability to a 50 basis point cut, according to CME's FedWatch tool. However, 10 times research warns that this contrasts with their view of the prevailing consensus leaning towards aggressive cuts. Growing pains, fourth quarter 2024, set for explosive growth. While September has proven to be a difficult month for Bitcoin, Cipollaro highlighted the seasonally strong fourth quarter, now less than 3 weeks away. According to NYDIG data, October and November have typically been the strongest for Bitcoin, posting mean gains of 16.1% and 40.6% respectively. Something echoed by other analysts, such as popular pseudonymous trader titan of crypto, who pointed to the final quarter of this year as a potential breakout point, describing it as having epic potential for price action. Meanwhile, historical and technical patterns suggest that a six-figure Bitcoin is still in play. As we move toward 2025, Cipollaro supported this view, noting that comparisons to previous cycles could indicate where we are in the broader bullish narrative. The recent uncertainty and volatility may just be growing pains. Leading into fourth quarter, Cipollaro noted the most looming concern for the crypto market as the upcoming U.S. presidential election in November. Former President Donald Trump has made his mark as the crypto-friendly candidate, but much less is known about Vice President Kamala Harris's stance on digital assets, leading to heightened uncertainty and increased volatility in the meantime. Cipolaro added, "We won't guess as to which candidate might win the election, but November might be a pivotal moment for the industry. Until that time, however, Bitcoin might be at the whims of the broader market backdrop." Follow us on Google News. Disclaimer: crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. You could lose all of your capital.